Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 9th day of April, 2019, and this is the Daily Report for Gold and Silver. We have a mixed bag in the precious metals markets today, with palladium and gold tracking higher, silver and platinum tracking lower. But it is the fact that we have seen gold break above the psychological level, that $1,300 mark yesterday, as well as follow through upside moves today, taking it to 1308.20, that has really gotten me excited. Of course, we are long from approximately 1301 and change. We'll talk about our trade in detail when we pull up our technical studies, but it's the multiple factors that I cited in our opening letter that are really behind this most recent move that we are seeing in gold. Let's take a look at current pricing. Gold futures is basis most active June contract, currently trading at 1308.20. That's putting it up about $6.30 on the day. Silver lost about 3 cents on the day, although it is still above $15 at $15.19. And platinum also had a drawdown today, giving up about $16.20 and closing below $900 at $896.70. And then palladium regained its move to the upside, $1363.80, and that is a net gain today of $10.70. Let's take a look at our technical studies. So traders, the chart that I do want to look at today is a daily candlestick chart of June gold. A couple of things that kind of jump out at me as I look at a bigger picture in the market, and then we'll talk about our trade in a second. But that is the following facts. As soon as this market came down and touched this low came in roughly at $1,280. Market tracks back up, I believe, 1324, and when it came down and made this low here, it actually made a higher low than the previous low. And traders, that is significant because in a market you're not going to see it move straight up or straight down. You're going to see it move in a series of stair steps or waves. In a bullish market, you must have a series of higher lows followed by higher highs. So we got the higher low, and now we want to see, are we going to get the higher high? And I believe that that is quite possible. We talked about the fact yesterday also that we had a solid base really forming in gold pricing last week, and that was indicative of these small-bodied candles that could not trade over 1300 and didn't really break far below 1290, except for a couple of lows that came in at the end of the week. And then when we look at price action yesterday and today, of course, yesterday we put on our long trade. Yesterday was really the first solid move above $1,300, and I've got that marked with this blue line here, but that was the first solid break above 1,300 where it actually closed above 1,300. We had a couple of days in which we flirted with the highs going into that price point, but nothing last week converted to a close that came in above that key psychological level. And as I said on Friday of last week, as soon as we see the market have a solid close above 1300, we would issue a buy signal. That's what would trigger it amongst other things, but primarily that's what we would look for. And in fact, we got that. Traders taking the call got in roughly at 1301. I'm averaging it at 65 because pricing then was 1301.50 to 1301.80, which is why I took the middle ground at 65. Today, we had a solid move above that. We're at 1308.20. And the one thing that we can see in terms of any kind of resistance is that 50-day moving average matches up within about 60 cents of the high that we saw gold go to today. I don't really think we'll have any issues breaking above the 50-day moving average. The 50-day moving average indicates on a short-term basis that we're in a bullish trend. Gold has maintained a standing above both the 100-day in blue and the 200-day in red for quite some time. In fact, since approximately the end of last year. The only time we broke below that, we only broke below the 50-day moving average, and I think it's about time that we'll see it move back up above it. The next level comes in roughly at 1313, 1314, and it is a Fibonacci harmonic, which is why I want to watch it closely. It's both a 2-3% retracement for our short sequence, and our short sequence, simply put, begins at 1196 and tracks up to 1350, whereas our long-term Fibonacci retracement, I'm really going to have to compress this chart a little bit, that actually starts at 1122 up to these tops at 1370. So the fact that we have an agreement or a harmonics of those two levels to me is significant. Then right above that, we have this former top that comes in around 1324. So I think that depending on the activity, meaning the fundamentals behind what has been driving this market higher, I think that we'll easily track through the 50-day as well as the 1313. I think that if we do see some resistance, the first area really is going to be 24. But here's what I'm excited about. If we break above that level, meaning 1324, this former top, we really have pretty clear sailing up until 1350, and that's going to be our exit strategy or target. I believe that we could in fact see gold run for approximately $50, and if we see a true rally here, we could have an extended move anywhere between $50 and $100, which would take us past the former highs at 1370, and 1370 has been that price point that has been so difficult for gold to break above on a closing basis. It's been stuck there for over 3 years, but that's still a ways away. For right now, my recommendation is to maintain your current long position and to maintain your current stop. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.